Hello everyone, welcome to Cheongfuli Weekly Report. We bring you the latest price and market analysis of China's steel market every week. Spot prices staged a mild rebound this week. Up to now, the spot price of rebar has increased by 30 yuan per ton week on week, while the spot price of hot rolled coil has risen by 40 yuan per ton week on week. Driven by the price increase, market trading sentiment remained stable month on week, yet overall market activity stayed at a low level. On the macro front, overseas geopolitical situations saw significant fluctuations. The US-Iran conflict continued to escalate this week, with the US launching multiple rounds of airstrikes on Iran and destroying multiple Iranian facilities. In response, Iran has officially announced the temporary closure of the Strait of Hormuz, waterway mine-laying operations, and suspension of oil and gas shipping. The world's two major energy shipping lanes have simultaneously entered a high-risk operating state, and overseas macro market sentiment may remain volatile in the short term. In terms of economic data, the latest U.S. economic readings all fell below market expectations. The U.S. June CPI rose 3.5% year-on-year, compared with market expectations of 3.8% and the previous reading of 4.2%. The U.S. June core CPI increased 2.6% year-on-year, below the consensus forecast of 2.8% and the prior value of 2.9%. The sustained easing of inflation pressures has further reduced market bets on Fed interest rate hikes within the year, delivering periodic positive sentiment to global capital markets. On the supply side, total steel supply continued to decline. The total supply of five major steel products reached 8.2582 million tons this week, down 212,100 tons week on week. Meanwhile, domestic molten iron output posted a marginal drop. By product, rebar output fell to 1.9684 million tons this week, a week-on-week decrease of 83,200 tons. Hot rolled coil output declined to 2.9748 million tons, down 65,400 tons from last week. On the demand side, market consumption rebounded marginally week on week. The apparent consumption of steel stood at 8.4368 million tons this week, up 75,200 tons week on week. Specifically, the apparent consumption of rebar was 2.0433 million tons, rising 94,700 tons week on week. The apparent consumption of hot rolled coil was 3.0202 million tons, a slight week-on-week decrease of 3,200 tons. Despite the marginal improvement in overall demand, market sentiment remains relatively pessimistic about the outlook amid the traditional off-season, with weak speculative demand. In terms of inventory, the total inventory of five major steel products recorded a marginal destocking this week, totaling 16.1606 million tons, down 178,600 tons week on week. By product, rebar inventory stood at 6.9248 million tons, decreasing 76,000 tons week on week. Hot rolled coil inventory was 4.3577 million tons, a week-on-week drop of 45,400 tons. Overall, China's steel market operated steadily this week, featuring contracting supply, marginally recovering demand, and slight inventory destocking, with the overall industry fundamentals improving moderately week on week. Currently, the market is in the traditional consumption off-season. The construction pace of end-user projects is slow, with limited incremental downstream procurement demand. On the supply side, sustained shrinking profit margins for steel mills and the launch of seasonal centralized maintenance have led to a gradual decline in molten iron output, effectively easing the structural pressure on steel supply and demand. On the cost side, the escalating US-Iran geopolitical conflict has boosted raw material prices, providing periodic cost support for steel prices. Market expectations for the future remain cautious and pessimistic on the whole, and steel prices are likely to maintain a volatile trend in the short term. Subsequent market trends will be highly dependent on changes in steel supply and demand, as well as the resumption progress of coal mines. Based on the above analysis, the operational suggestion is to adopt a demand-based procurement strategy and strictly control inventory risks. Institutional analysts hold the view that the steel market is currently in its traditional off-season, and weakening demand will continue to weigh on steel prices. Nevertheless, steel mills have recently launched concentrated maintenance and production cuts, resulting in a steady decline in molten iron output and marginal improvement in steel market fundamentals. In addition, domestic coal mines are recovering production at a slow pace, offering cost support on the raw materials side. Market participants will closely monitor policy positives to be rolled out at key national meetings scheduled for late July, which are expected to lift market sentiment. Steel prices are projected to fluctuate sideways in the short term. In summary, steel prices will generally remain range-bound. Close attention should be paid to shifts in steel inventory levels, domestic macro policies, and changes in coking coal supply. Okay, feel free to leave your thoughts, questions, or any related inquiries in the comment box below. And if you found this video valuable, don't forget to follow us for more updates. See you next week.